Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, August 21st, 2008. Well, a mixed day on Wall Street today, and a lot of it had to do with the commodities. Now, this is the amazing thing we're going to discuss in today's market analysis video. And not only are we going to analyze the charts, but we're going to talk about the commodity bounce that really ripped today. And when I mean ripped, I mean we're talking about a rally in oil close to $6. It's over a $20 bounce in gold. And we've been talking about since last Friday a commodity bounce, and it continues to be a dead-on call. Today we figured the market would be neutral to slightly positive, and it was really mixed. I mean, you know, it was slightly up, I guess, on the Dow, as the Dow was up 13 points. The S&P was up about 3 points, but the Nasdaq closed lower, about 9 points down on the day. Now, the keys in today's chart analysis video that I want to cover is not only are we going to move back into a pure neutral stance, as we may see something on the horizon, and we'll let you know more about that tomorrow, but I want to just be cautious here going into next week and early next week. And we're going to discuss that a little more in the video as well. But the fact of the matter is this, guys. You had oil up $5 to $6 today. You had tensions between Russia and U.S. not pretty, and that's part of the reason for the oil and gold bounce. You also had Goldman Sachs relatively weak on the day. And all of these things put together, and you still had the markets closing flat to positive. All right, and the fact is that that's a very bullish sense in the near term, and meaning today. Now, do we think that's going to necessarily last? No, not necessarily, and that's why we're keeping this neutral stance, because we're doing these calculations, and you guys know we do these proprietary technical calculations, and we are seeing a mixed bag out there right now. Yes, the market's been strong yesterday and today, closing flat on the day in the view of positive oil and a big move in oil and commodities, but we're not out of the woods yet, and we want to make sure that we're out before we move into a bullish bias. Okay? So let's get right into the charts, alright? Now, what you saw today, again, and just look at the chart analysis from the intraday moves today, you can see that the market definitely had a bid. Even with oil rallying, and really oil got started once that natural gas inventory number came out, but it was really more of a catalyst of the tensions in the middle, you know, in the Far East and so forth, in Russia and the Middle East and all that stuff going on out there, really catapulted the USO higher. And you could see, really, though, every time oil rallied, it didn't matter. I mean, you had oil pop $1 here, pull back 50 cents, pop $1, pull back 50 cents, to the point where it was up over $6 at points in the day, and this market just continued to chug higher. And you could see the underlying trend line here, right? Check this out. You take the low of the day, really from 9:30, and you just draw it underneath, and you never really pierce that line all day until right into the close or after hours. And that's what it really comes down to today. So what you can see here again is an underlying bid in this market, as light volume really is keying off this market to the upside, at least in the near term, and holding it steady even with oil rallying. And I really want to point that out. Today, the lightest volume day of the week pretty much, and with that, you saw the markets able to get a bid, as it didn't take much to just push the markets up. Now, let's go to the daily, because the daily chart really is where it's all at, and I want to go to the SPY on this, so when we look at the daily, we get a better sense. But you guys know that we talked about this key trend line here, and I want to draw that in again and really focus on this. And you can see right here. Now, 2 days ago, you know, so not today, yesterday, but the day before, we saw that this line was broken to the downside. Notice the drop here on the chart. Now, that was a negative signal, all right? And the reason that was a negative signal is because you had this underlying trend line of support that was now broken. The key here is, as technical, beautiful, I don't know what we would use the term as, but as being so into the technicals as InTheMoneyStocks.com is, we've calculated key issues with people jumping short too soon here. And you can see that that's a perfect example of what's happened over the last few days. Alright? A lot of people would have jumped short as soon as you closed here, but you'd actually be down on that play currently. The key here is you want to see this bottom line from the low get taken out, what we like to call confirmation of the move below, because it's very likely that should you recapture these key moving averages and even get above this line, you all of a sudden have an issue where the markets are heading back higher again. And you don't want to get caught in that whipsaw. So what we like to do is always wait for that breakdown point to trigger, and then we can talk about another move down. Now, the key in this market, again, moving back into a pure neutral state here, is that we're setting up for a possible two scenarios. Number one is we're right on the cusp of the 50 and the 20 moving average to the upside and getting back above this trend line. Alright? Now, should that happen, all of a sudden the market goes back into a little bit of a rally type mode possibility, where it could be another move up back to the resistance points right up here. Now, the negative of this is that pattern-wise, we're now beginning to form what's known as a bear flag type pattern, where you trade to a sideways slightly upper move, and it can set up for another drop in the markets. Alright, so that's the two scenarios that we have right now, and that's why, as a trader, risk-reward, it's not really worth it. And today or tomorrow, it doesn't really look, this chart's not telling me that I have a great possibility of a profit either way in this market. It could go either way. There's not a definite out there. And that's why we stay in the neutral stance of this market. And at this point, that's the best way to be. Now, one thing I will point out, folks, is you just want to keep an eye on this lower line right here. And obviously the 20 and the 50 moving averages right here, which are basically right where we closed, right above where we closed today. Alright? And also keep an eye on this line as well. This will be the upside resistance point. You can even extend this a little more right like that, and you get that line connecting. Now notice these 2 points are going to connect up here, and that can be another obstacle should we push up to that level that we have to deal with. Okay? So again, notice the light volume today. Lightest volume really of the week. On this Thursday. Now, tomorrow's probably going to be even lighter volume unless we get some sort of major news announcements out there in the morning. But for the most part, it looks to be a Friday in August and late August. Everyone's on vacation. We talk about that a lot. And oftentimes that gives an underlying bid to the market. But again, as I talked about, we'll have something in our video tomorrow you want to come make sure and check out, because we are calculating. Our calculations are beginning to point to something that we have to alert you to tomorrow. But we want to calculate things out again a few more times and make sure it looks like it could be a factor come Monday, Tuesday. Alright? So stay tuned for that video. Now, again, just looking at this chart, you guys can see a very plain and clear. Here's a key trend line. We had the breakdown. We haven't confirmed it yet. Support right here. Resistance on the upside right here and right here. And the moving averages. You have a lot of little supports right up here that are also going to come now together to form a little bit of pressure, and we have to watch that very closely. Now let's look at the Nasdaq, because the Nasdaq chart is very unique in the way that you had a huge move up we talked about. We called the top on the market right here in the near term for a pullback. Now you've seen a pullback, and we actually touched that 20 moving average. So the Nasdaq has support here. It also has support right here at the 50 moving average a little bit below. So you have two key supports on the Nasdaq. Number one at the 20 moving average right around 2367-ish, give or take. And the next one would be right here at the 50 moving average, 2340, give or take as well. Resistance remains this upside area right here. This will be big time resistance on the upside, and again, we'll watch and stay in a neutral stance, and just note that the Nasdaq could dip as low as here for next support, or it could get a little bit of a move back up, and we'll watch that for tomorrow. Alright, now what I want to quickly show you guys is, let's just quickly dip into the SPY, go back to the SPY daily, and I want to move into the outer banks of charts here. I want to go to the weekly chart and then the monthly chart, just to see if it tells us anything. And we always like to look at bigger time frames. The bigger time frame is more dominant, and I want to point that out because it's very important to note, is that again, when you deal with a larger time frame, if I'm looking at the 1 minute, and then I look at the 10 minute, whatever pattern's forming on the 10 minute will probably be the general trend on the 1 minute. Whether or not you get a little bump in the 1 minute chart, that's another story, but the overall trend will probably play out due to the 10 minutes pattern. Same thing goes with the daily, looking at the weekly, or the monthly from the weekly. Alright, same thing applies. Now, one thing I am seeing on this chart is just note this trend line. Alright, very clear. Very clear trend line. Now, this is an upside bias, an upside resistance point right here. Major resistance if we ever get up here. Now, that's a long ways in the future looking at the weekly. Right away, number one, I'm looking at the 20 moving average resistance right here that we could see in the near term as well. So the weekly is showing us a possibility, maybe after Friday, Monday-ish, a possible move up, and we still do favor that. Whether or not we see a downdraft, we'll let you guys know tomorrow, but it's very near-term bias downtrend possible. Again, we'll stay in that neutral bias until we get a better picture, but let's keep in mind that you could be seeing that downtrend for the near term, and then a move up to this 20 moving average, possibly as high as this trend line until we see our next leg down, which we do believe will come in late September, early August. October, early October. Okay, enough of that. Let's quickly move to the monthly chart, see if it tells us anything differently. And again, just stay with us from video to video, and we'll guide you through the markets. It's pure technicals here. We really just follow technicals and psychology is a form of technicals, actually. The point is you kind of take out all the fundamental BS, which is just BS out there. All right, on the monthly chart of the SPY, you can see a little bit of an M top here from going back a ways, and that's what we always talked about, and we're seeing. You have the MA pattern formation here. You have a nice little bottoming tail here and a little move up, but again, notice you have the 50 moving average resistance right here on the monthly chart, which is putting a little bit of a top, and that'll coincide if we had gone back to the weekly with the weekly. Let's flip to the weekly here, and this point right here, and obviously right in somewhere and right in there. Alright, so this point would coincide nicely on that chart on the monthly. So you can see how everything lines up. And you always want to pay attention to the larger time frame for the larger period. If you're looking for a little bounce here and there, then you go to the smaller time frames. Just like the 1 minute, you could get a quick 1 minute bounce, but the 10 minute would overrule that over the 10-minute time frame. Alright? So keep that in mind, folks. We'll update you tomorrow. Just come back to the videos. Also, come join that webinar. I keep stressing that webinar next Tuesday and Wednesday. Very, very key to learn all the technicals we do. It's Tuesday, Wednesday night of next week, 6:30 to 8:45 each evening. Join the Swing Trade Alerts. Join the chat room. We'll talk to you all tomorrow. Take care.